Welcome back to AS Gold. This is your weekly gold outlook for Tuesday, the 16th of June, 2026. In the next few minutes we break down every major force moving the gold market, the Federal Reserve, inflation, jobs, geopolitics, and the exact technical levels you need to watch. Let's get into it. First, the snapshot. Gold spot is trading near $4,340 an ounce, after a powerful 2.77% rally on the 15th of June. The headline event this week is the Federal Reserve meeting, which begins on the 16th. Our bias for the day is cautiously bullish, but expect volatility as traders position ahead of the Fed. Here's the big picture. Gold remains in a powerful long-term uptrend, but it is consolidating well below the record high near $5,300 printed during the February escalation in the Middle East. The 16th of June is a pre-Fed positioning day. Our base case, at 55%, is range-bound to mildly higher, holding above 4,300. The bullish case, at 25%, is a break above 4,400. The bearish case, at 20%, is a slide back toward 4,200. Let's look at price. Gold is changing hands around $4,340, up roughly $148 from the 12th of June, and a remarkable $928 higher than a year ago. After the February spike to 5,300, gold suffered its largest drop in 40 years, falling 12% to around 4,680, before stabilizing. The structure is clear: a secular bull market, currently catching its breath. Now the main catalyst, the Federal Reserve. The two-day meeting begins on the 16th, with the rate decision and the new chairman Kevin Warsh's first ever press conference landing on the 17th. The policy rate sits at 3.50 to 3.75%, and a hold is widely expected. The key swing factor is Warsh's tone. He took the chair with a clear mandate and pressure to cut rates. A dovish debut could send gold sharply higher. Inflation is the next piece. May's Consumer Price Index, released on the 10th of June, came in hot, up 4.2% year over year, the highest reading since April 2023. Core inflation was firmer but more contained at 2.9%. The driver was energy, up over 23% on the year, a direct result of the Iran energy shock. Hot inflation keeps the Fed on hold, which caps gold, but it also fuels inflation hedge demand. A double-edged sword. The jobs market tells a similar story. May non-farm payrolls, released on the 5th of June, smashed expectations: 172,000 jobs added, against a forecast of just 80,000. Unemployment held steady at 4.3%. A labor market this strong all but extinguished hopes for a near-term rate cut and lifted the dollar, a clear headwind that framed gold's setup heading into this Fed meeting. What about growth and the broader data? There is no major GDP release on the 16th, so the growth story will come through the Fed's updated projections in the 17th dot plot. The same week also brings retail sales and the Philadelphia Fed Manufacturing Index, adding intraday volatility. Remember, the real driver for gold is real yields and the dollar. Higher yields pressure gold, any dovish surprise reverses that in an instant. Geopolitics is the single biggest wildcard. 2026 has been defined by the US, Israel, and Iran conflict. The February strike sent gold spiking above 5,300, but here's the paradox. It then suffered its sharpest drop in 4 decades, because surging energy prices lifted the dollar and crushed rate cut hopes. The lesson: gold does not always rise on conflict. Watch for fresh escalation, which is a bullish spike risk, while central bank buying continues to support every dip. Now the technicals, starting with resistance. Immediate resistance sits at 4,350. Above that, the key supply zone runs from 4,375 to 4,400. Then comes the 21-day moving average at 4,430, and the 200-day average near 4,460. A daily close above 47.50 would be needed to confirm a full bullish reversal. On the downside, the levels to watch are clear. Round number support sits at 4,300. Below that, first support is 4,230 to 240. The line in the sand is 4,185 to 190. Lose that, and the door opens toward 4,118 to 147. Defending 4,300 keeps the bulls firmly in control. Momentum is turning. The daily MACD histogram is narrowing, suggesting corrective pressure is fading. On the 4-hour chart, the stochastic is turning up from oversold territory, and the 15th strong candle shows buyers re-engaging. The relative strength index is lifting off its lows near 35, rising, but not yet overbought. Price is now pressing back toward the 21 and 200-day averages. A close above that cluster flips the near-term bias firmly bullish. So here's the game plan for the 16th. On the bullish side, above 4,350, and especially 4,400, the targets are 4,430, then 4,460 to 4,516. The bullish view is invalidated below 4,300. On the bearish side, a rejection at 450 to 4,400 opens 4,230, then 4,185. And the golden rule size down into the federal. The 17th's decision can override any setup instantly. Let's bring it together. The 16th of June is a positioning day, cautiously bullish, but volatile and headline-driven. Sticky inflation and a strong jobs market argue against rate cuts, while geopolitics, the energy shock, and central bank buying keep a firm bid under gold. The decisive move likely comes on the 17th. From the federal longer term, major banks like JP Morgan still target $6,000 an ounce by the end of the year. If this breakdown helped you, hit like, subscribe, and turn on notifications so you never miss an AS Gold outlook. Trade safe, and we'll see you next week.